Okay, I think we're going to get started, everyone. So we keep on time here. Before I bring Frederick up onto the screen here, just a couple of housekeeping details for everyone. Um, my name is Mike. I'm with Shindig, the platform you are using to um, view this presentation, designed to be an interactive experience for everyone. So we encourage you to ask questions and be involved, whether you want to ask a question during the event or later on when he's taking questions. But you could submit them at any time. Um, you'll see on your lower right hand corner of your screen two buttons. There's an ask button and a raise hand button. If you would like to text a question in, just click ask, type it in, and it'll come up in a queue. And we will, Frederick will answer those as they come in, or maybe wait till the end. He'll sort of tell you how he's going to handle that. If you have a question that you'd like to ask on video, you can do that also by raising your hand, and we'll actually bring you up on stage if you have your webcam turned on. Um, and you can talk to Frederick directly that way. But that's about it. If you have any tech issues, just send me a private IM and happy to help. Otherwise, we'll get started. This is being recorded. If you're having a private conversation, that is not recorded, just the presentation itself. So let me bring Frederick up on the screen and we will get things going. Thank you.
Here we go. Hey, welcome, welcome, welcome. I'm so pleased you could join in this first annual celebration and event. Happy Hump Day. Humps all around. It's midday, midweek, and month and afternoon today. We can just cruise into fudge season and the holidays. Let's mark this program as a declaration to make investing fun again. That's what that first slide says, and that's what it's all about. Are we having fun yet? Let me tell you, it's great fun being Frederick. That's me. I'm Fredrik Ridland. I'm no fool, however, I am about fun. I write about dividend stocks on Seeking Alpha and talk markets as Fredrik Arnold. I also have a company dedicated to fun, Ridland and Company, and my Dividend Dogcatcher website, www.dividenddogcatcher.com. There you see it. Let me tell you, the Shindig format is great for questions and comments, and I request that you write down your questions and I'll answer them after these opening comments. And also, I have a couple of pauses in the middle of the program where we can get questions in too. But let me tell you how I got started in dividend stocks. It came about as a honeydew project. Now that's not out buying a melon project. It's a honey, please do this. My wife Patty asked me to make her a list of dividend stocks to invest in. And I took it on and soon realized that there was more to it than just writing down a random list of dividend stocks. I had questions to answer, such as how do you rate them? How do I rank them? Where do I look? Who are you going to call? So my first step to fun was to keep it simple. And I went to the dogs. Namely, I learned about dogs of the Dow. And here's the thing about those dog stocks. You may have heard the term dogs of the Dow, maybe not, but I describe it like this. In 2005, I bought 5 stocks from the Dow 30 index. And here's how I did it. You can too. 30 stocks make up the Dow Jones Industrial Index. And from these, I found 10 that I could make it simple and keep it simple and do the dogs of the Dow. And the 5, you get in touch with your broker and invest an equal dollar amount in each of the 5 highest yielding, lowest price stocks in the Dow. Those are called the Flying 5 or the small dogs of the Dow. And if you do this, you have the chance to average 20.9% annual return. As reported in US News and World Report, that's been going on since 1973. So now here's an important note. Over the past 30 years, and we're at the dogs of the Dow, you pick out of the 10, you pick the smallest, highest priced, lowest priced 5. with the highest yield, and that becomes your collection. So here's the first suggestion. Use the Dow Industrial Index for leverage. I've used it since 2005 to hold Dow stocks for 1 year and sell off as winners and harvest the cash to invest in new emerging opportunity dogs. And those would be the same ones on the Dow. It's like riding a bicycle. But you only turn the crank once a year. Then I made another discovery that there are high quality stocks in more than one place. There isn't just the Dow. There are many, many other lists to go by. So here's the dog rule. Dogs earn and stocks earn the dog moniker by exhibiting three traits: paying reliable repeating dividends, the prices fall to where the yield, the dividend dog price, goes up and higher than the peers. So the yield, which is dividend divided by price, is higher than the rest of the collection. In any questions at this time, uh, this is a good time to ask them about the Dow and the dogs rule. Okay, hearing none, seeing none, I'm going on to analyze how I analyze the dozens of dividend equities every day on my website, Dividend Dogcatcher. I also post on the site Seeking Alpha and TalkMarkets, and I devise specific dividend stock investment programs for business managers, owners, families, partners, executives, entrepreneurs, everybody who wants to make money with a process, a plan, and a program that lets you choose a path to build dreams of prosperity, travel, business, charity, legacy, your dreams, and dog catching is a path to sustain and grow your amazing life. As your dog stock investments provide massive passive income. And now let me tell you how I became a dividend dog catcher. I was spending most of my life denying that money mattered. Went out of my way to avoid it, and as a result, then I met a money magnet, Patty. She attracted money and she attracted me. She was cash, income, wealth, prosperity. She actually looks for ways to stretch her money. She loved dividend stocks and she also loved me. I married her. Smart move. Now I've become a money magnet too, and Patty encouraged me to find reliable dividend stocks to invest in, and I did. Since I was doing dividend diligence, I decided to publish it on the financial website Seeking Alpha, and not to that went about earning me, when I started, a penny a click from every reader on a laptop or a desktop device. TalkMarkets provides me followers now too. So for a penny a click may not seem like much, but with a small army of followers, it works. And you're here today because of that. You want to learn how to make passive income too. And you can be a dividend dog catcher. So, any more questions? The rules to find a productive dividend dog stock are on the screen, and Dividend Dogcatcher is devoted to dividend stocks. In finding paper puppies, they are so cheap in price that their dividends are flying and their yields are through the roof. So this is not about kibble, but cash. This is a place to capture the biggest rewards from the friendliest, gentlest, safest dividend dogs. It's a process safe and simple enough that your fourth grader can grow enough from $1,000 invested at age 9 to pay for college by 18 and sustain her after she graduates. Dividend Dogcatcher is for investors of any age looking for a way to grow maximum riches at minimum risk. That's financial speak for a reliable path to money. So are we having fun yet? I know where the money is, and here's where we get to the juicy part, where I get to name those dividend dog stocks that performed the best each month since last August, when I started selecting and writing about the dogs of the week. So here we are at the Dogs of the Week place, and there's a solid set of 12 rules that will help you a productive puppy and not a downward dog. I use the following 12 steps to pick a suitable dogs for the kennel. First, does it pay a dividend? How much is the dividend? Number two. Three, what is the share price? How many shares will $1,000 buy? How much dividend income will that $1,000 worth of shares return in a year? Best if it's more than the single share price. What is the yield? Dividend divided by price. Best if it's over 4%. What does the company do? It's best if it's in a niche market and is unique to that market or sector. How long has the company been in business? Best if it's 10 years or more. How many years has the company paid a dividend? Best if it's 5 years or more. How many years in a row has the company raised its dividend? That too, best if it's 5 years or more. What is the mean target price analysts predict for the stock in 1 year? Now, we're looking for one that's 5% higher than the current price. And how many analysts are following the stock? 3 to 9 give it most reliable predictions. So we're looking for analysts between the numbers of 3 and 9. But how do analysts rate the stock? Now, they usually do a strong buy at 1 or a strong sell at 5. We're looking for stocks rated at 2.5 or lower, which is buy to buy and hold. Each week, I post a dividend stock on my subscription site, and I call it the Dog of the Week. I post it when it comes as close to possible to meeting those 12 criteria I just read you. And for Dog of the Quarter, every 3 months, I pick a dog based with the best track record of 6 months or longer. So toward the end of the show, I'll announce the dog that beat them all and made the most gains since being selected as a Dog of the Week. That will be our Dog of the Year. So first, here's the dogs of each month since last August. Let's look at how I use those 12 criteria to pick my first dog of the month winner. That was Artesian Resource Corporation, Artna. This was my second pick for the litter of 52 top performing dogs. And here's what I said. This week I went for new blood and did not consider the previous 5-star rankings. Instead, I chose a sector on which to focus. And Barron's reported that utilities that week had the best job because they were only down 1.39% that week. So I went for a 5-star utility dog. The screening began by listing all the utilities that paid dividends 5 years or longer with raises each year. The aristocrats, the champions, the contenders, and the challengers. I found 21, and then I compared that list with all utilities rated buy or hold 1, 2, or 3 by analysts in the Yahoo Finance Stock Screener, and that narrowed the choice to 3 water utilities, one from California, one from Connecticut and Delaware, and Delaware's Artesian Resources won. That was on overall performance, particularly a 5-year and a 1-year price upside history. Momentum. Momentum carried the day. Since August 2015, Artna has gained $413.35 in price and dividend after deducting $20 for broker trading and tracking fees as of November 11th. So not bad for that original $1,000 investment of 41%. So these yields, results, gains, and losses for the monthly dogs are all calculated as Monday, November 11th. In September, I picked Preferred Apartment Communities, APTS. This was my third pick of the series, and at one point, I thought I might choose only stocks that had the ticker symbol beginning with A. But my review of apartments was that the residential rental business was going and the economy warms up, and millennials and echo boomers venture into new living standards. So the company has a goal to be the youngest multifamily portfolio in the industry. And it's assertive small cap grounded in a steady, safe bet to grow in the rental housing market. Preferred Apartment Communities earned recognition as Dog of the Week September 4th. And since September 2015, APTS has gained $327.26 in price and dividend after deducting $20 for broker trading and tracking fees. That was 33% on the $1,000 investment. APTS beat out Altria, MO, and Lockheed picked the same month. Now, Maxim Integrated Products was the October dog of the week. Maxim, or dog of the month, and I was surprised to find a Maxim, a broadline semiconductor firm, soaring when the market was so down. Unlike Intel and Texas Instruments, the firm's status as a custom source of custom circuits in a broad range of industries, from automotive to data centers to consumer, help keep the orders flowing. And since October 2015, Maxim gained $189.10 in price, and that's 19% on $1,000. October was a tough month because my next pick, in the oil field meltdown, cut its dividend as oil prices sank 6 months after it was picked as a dog of the week. And it has since gone down 87%. So those first three dogs, it almost beat out in losses. But I must tell you that there really is a stock with the ticker FUN. It's our dog of the month for November. That was Cedar Fair. Cedar Fair is having fun. It's a Disney without food, where movies are overpricing. It is main theme characters are Charlie Brown, Snoopy, and the Peanuts Gang, created by my fellow Minnesotan Charlie Schultz. And fun packs them in with a gain of $126.52 in November, 12%. And the only upside trade in November outside of GE, which made $4.42 since November 2015. So fun helps me put the ugly Calumet trade in perspective. And that's even put in better perspective by my December trade, ADC, Agree Realty Corporation. We're having fun saying our ADCs, D must be for dog, selected in December. ADC could be called our Christmas dog because it was selected December 25th. It's the only public $40 or 39% in gain from December to November 11th. In January, I picked another REIT, United Properties Inc., UMH. This was the fifth financial stock on the list. It's conservative, and naturally, being conservative, it rallied to the second best of all the financials so far. Since January 2016, UMH has gained $390.04 in price and dividend after deducting $20 for broker trading and tracking fees. That's a 39% gain. In February, I picked Compass Diversified Holdings, CODI. In the old 9-sector scheme, it was the lone conglomerate. And while it didn't make dog of the quarter, it nailed the monthly competition, netting $286.15, or nearly 29% on the $1,000 invested as of November 11th this year. March, we picked EPR Properties. EPR described itself as developing, owning, and leasing and financing properties in select market segments related to entertainment, education, and recreation. So the E and the R are for entertainment and recreation, and the P for properties, Entertainment Properties Trust. It's at $98, or nearly 10% on $1,000 invested. So at its peak, when it was selected dog of the month, EPR was up $280 and $286, but it's down again. Monmouth Real Estate Investment Corp was the April dog of the month, MNR, and it is one of those real estate investment trusts that were the high rollers in the 52 dog kennel. It too serves a niche market. Monmouth is an MCRI. Monmouth Real Estate Investment Corporation is one of the oldest public equity REITs in the US, and it specialized in net lease industrial properties subject to long-term leases, primarily to investment grade tenants. MNR has managed to net $155.44 from tax day to November 11th. That was our April dog of the month. May, we went to a bank, a regional bank, Univest Corporation of Pennsylvania, UVSP, showing enough gains to make the dog of the month for May. It serves the Mid-Atlantic region, is headquartered in Sauderton, Pennsylvania, and it managed to net $336.49 since May 6, 2016. In June, we went overseas, well, actually down south, to Brazil, to Bascom Chemical Corporation, BAK. It is the major diversified chemical company in Brazil and had a net gain of $392.72 since June. That really got our attention. The last dog of the month in July was Quad Graphics, QUAD. Family culture drives Quad to excel as a partner of choice in business services. It's a printer, and it's a net gain of $257.92 since July, made Quad the top dog for that month. So, the dogs of the month are completed from August to July 2016, and I learned a lot in that first selection. The next kennel of 52 will be screened for safety before checking any of the other 12 steps to perfection. Invest and don't lose money. These are the paths to safety. And the stop loss conversation is all about putting an automatic order in to sell a stock under a set condition, say a 10% drop in price. The investor sets a stop with his broker at 10% down. A variation on a straight stop is a trailing stop, which moves as the stock moves. For example, you buy IBM at $100, add a trailing stop, and after IBM moves to $200 but falls to $180, the trailing stop will automatically sell the shares at $190. The rundown, however, on stops is that it prevents one stock from tanking, blowing up, imploding, or having a major catastrophe. Stops are automated so you don't have to watch and react to your trades all the time. And you define your risk limit, set a stop, and then quote unquote rest easy. The trouble with stops is that they can cause really big losses and missed market moves. Overnight, market drops 30%, your position is sold automatically at the next day's opening, and you just lost 30% and missed the opportunity to jump on a likely upside move the next day. So the stop strategy also compounds and confounds itself, which is to say that if you have many trades set with stops, you can end up with losses on all of them and nothing to show in the market. So when the stock goes down and becomes a downward dog, one of three things is happening. The company is failing, and that sends a big smoke signal. Dividend stocks show a big tell as prelude to future failure. And that's going to be our secret sauce to avoid bad trades. More about that later. Big investor is cashed out. That's the second possibility. Company failing, big investor cashed out, profit taking happens. And then there is the panic selling, where weak investors choose to exit. So public businesses are built to cash in on specific wants and needs of their customers. Business is planned to doggedly pursue those wants and needs, and if not, it's not worth following, tracking, or owning. So as long as the dog is strong and in pursuit of its glory, follow that dog. And size matters too. A good stock decision starts with good stock matching 6 or more of those 12 steps I told about in the beginning to to get a perfect dividend investment. So given a good dog, how big should he be? That is, how much do you buy? Money management comes down to not putting all your resources into any single risk. We know how the story of all the eggs in one basket ends, Humpty Dumpty. On the other hand, Warren Buffett has 98% of his uh, investment in Berkshire Hathaway. But Berkshire Hathaway is diversified in itself and therefore not really just one investment. So my coach tells me she likes to invest no more than 1 to 3% of her total holdings in one stock. This also means the bigger the portfolio, the better. A bigger portfolio gives you more flexibility to add to your holdings, and when the market sinks, and more protection against losses when it rises. So diverse holdings spread across many sectors, industries, and strategies is a key to success for hedge funds, Warren Buffett, Berkshire Hathaway, and the rest of us. For example, if one stock sinks 50% and is 2% of your holdings, your portfolio is just down 1%. On the other hand, if your 2% holdings balloon to be valued to be 20% of your portfolio, celebrate. You've got a benchmark, and you don't sell the position until its happy scenario turns into some sort of drama. Nothing succeeds like success. Hang on to your winners. So to avoid trouble with failing companies unable to cover dividends, this is the rule to apply. This is the secret sauce. This is simply something you have to check when reviewing all candidates to buy. Cash flow must exceed dividend yield. That's the rule. In the 52 stock scenario we're celebrating, Calumet, the portfolio catastrophe, could have been eliminated using this rule. And this is the big dividend signal for possible future failure. If the company cash flow can't cover the dividend, look out. That stock buy was nearly 2% of the 52 stocks under discussion here, that Calumet buy. Despite losing 90% of its value, Calumet Specialty Chemicals is still alive, serving its customer base, and I'm watching it, even if it has to rebuild its financial backing. Calumet's reason to stay in business still exists. Ambitious investments outside of its special niche of specialty chemicals put it at risk. Calumet will likely emerge or be acquired by a complementary refining and retail entity. So I have to mention FUN, F-U-N, that Cedar Industries Disney on roller skates stock was a stock selected based on safety. It had cash flow in excess of its dividend yield. So now we're into more fun. We're going to talk to the top dogs of the quarter. But before that, have we any questions? What do we have in the question box? Anything? There we go. No questions yet? All right. I'll go on, press on to the dogs of the quarter. These were selected for their quarterly performances, and the numbers are different than what was posted on the November 11th monthly competition. These were their quarterly results, and only the Delaware Water Utility finished all 4 quarterly cycles and posted a final number as Q1 top dog. Artna finishes with a grand total of, as of August 28th, netting $328.70 or 33% for the year. The second quarterly top dog is Agree Realty. ADC, our Christmas dog, was definitely a contender for top dog of the year, posting big numbers for the Q2 period. Quarter 2 is September 25th. ADC posted a net gain of $467.68, almost 47% on the $1,000 invested. The third quarterly top gainer had stiff competition from EPR and ran ahead with the monthly prize. But Navient Corporation, NAVI, was the Q3 winner, posting a net gain of $340.12 or 34% as of September 26, with 2 quarters completed. The fourth quarterly top dog was also in the running for Dog of the Year, and that was Braskem, the Brazilian chemical company, which showed a gain of $259.80, or nearly 26% in Q4, with only 3 months as trading history selected as Dog of the Week. So that's the real fun. One of these dogs fetched nearly 50% gains, and overall, including the 90% loss by Calumet Specialty, the entire 52 dogs of the week have averaged 4.72% in gains in net and dividends and price. Thank goodness for the dividends. They delivered the bulk of the net gain, as price gains were nearly wiped out by our $20 per stock estimated broker fees. So your opportunity for dividend in fun investing is knocking. Tap into the new Dogs of the Week model portfolio is ready to and waiting for you at www.dividenddogcatcher.com. The new Dogs of the Week model will be at the same low price that it has been on Seeking Alpha for $27 a month, or an even lower one-time payment of $214 per year. That's $217 per year. I'm sorry, I have that wrong on my screen. So $217 a year, $27 a year a month. The Dividend Dogcatcher website is standing by to deliver all the safe 12-step tested Dividend Dogcatcher hunted secure dogs chosen in 2016. Plus, the new dogs for 2017 will soon be ready to fetch magic one-year gains for you. That first quarter portfolio is being put up around Thanksgiving time. And there's more, because you are here for the very first Dog of the Week celebration, and for the rest of today, November 16th, I'm adding a bonus, which I'll offer after I tell you about the companies that are Dog of the Year. Any questions before we launch into that? Yeah, we're still no questions yet. We're good. Anybody want to take the stage and ask one in live and in color? Okay, we're good. Okay, so let's go on to the dogs of the who were in the competition for the Dogs of the Week, or for the Dogs of the Week, made Dogs of the Month, Dogs of the Quarter. Now we're going on to name the Dog of the Year. There were big numbers as of September 11th put on by some of the companies. For example, Braskem Chemical came in at 356, Agree Realty 388, and Delaware's Artisan Resources Corporation, ARTNA, had a gain of 413.35. But did you root for the underdog? I hope you did, because as of November 4th, the smallest cap stock selected for the 52 in the Dividend Dogcatcher First Dog of the Week portfolio was ahead on gain. That was, and you saw a preview on the slide earlier, Manhattan Bridge Capital, LOAN, a hard money real estate lender located in the greater New York area, was the head of the pack. 4th of November, Loan had a net gain of $403, but a dark dog overtook the underdog. The honor of being Dividend Dogcatcher Dog of the Year, or DOTY, goes to Navient Corporation, NAVI. Navi snuck up out of nowhere in the past week. On November 4th, its price was $13.32 per share, giving it a net gain of $266, while Loan was at $403. But in 1 week, NAVI single share price ballooned from $13.32 to $17.05, passing the 60% upside mark to post a whopping $617.11 in net gains. So Little Manhattan Bridge Capital lost out by about $50 in the race for Dog of the Year, posting just a modest $567.50 in the time it's been a Dog of the Week. So any questions before I go on to the bonus? No questions yet. Okay. The opportunity for investing fun is still knocking. You have already heard that the opportunity to tap into the new Dogs of the Week Model 200 portfolio for 2017 is ready and waiting at www.dividenddogcatcher.com. You've also just heard how the 2016 Dogs of the Week income of $2,454 for year to date, or a 4.72% return without the safety feature. Think what happens with the new safety screener there to screen out the losers. Taking the price and the net cash flow yield as a indicator to covering dividend yield is going to make all the difference. The new portfolio of the week for 2017 is being assembled now to make more than this year's 4.72%. First quarter list will come online between November 18th and the 25th, just in time for Black Friday. So the buy today. Here's the bonus. When you do, you'll get a bonus of a Dog of the Day email every trading day into 2017. Every trading day on the New York Stock Exchange, this email is a one-page summary of the prospects for one safe Dog of the Day. That's 252 total safe dividend selections for 2017 alone. And if you calculate the new Dog of the Day program based on the average $49.17 return from this year's 52 Dogs of the Week, it's an $11,892 value. The daily dogs will be candidates to be named Dogs of the Week, and they are my gift to you for signing on as a Dog of the Week member subscriber. So only if you sign today do you get not only the $2,454 valued stocks Dogs of the Week, you'll also get a priceless one-page Dog of the Day every trading day in 2017 for a bonus. So putting it all together, buying today, you'll get your Dogs of the Week guidance valued at $24.54, plus almost $12,000 in value from the Dogs of the Day. This is a total of over $14,000 for only $217 a year, or $27 a month. So that's the story. $27 a month gets you 14 grand in value. Log on now. Go to www.dividenddogcatcher.com and claim your Dog of the Week subscription with special offers valued at 14 grand. This is it. The program is over. Unless there are any questions, it's Happy Hump Day. It's Wednesday. All the rest of the week is all downhill from here. It's also the middle of November. Enjoy it from here on. Just cruise into enjoy your happy holidays. Look for our next fun-filled Dividend Dog Shindig in the middle Wednesday in February. That's a bonus everyone here gets today. Free admission to the next Dividend Dogcatcher Shindig, no matter what admission fee is being charged finally. Have a fun-filled investing future. Thanks for being here. Have a great day.
Hi, Fredrik. Thank you very much for the presentation. And for those who attended, slides will be made available. Fredrik will handle that. This is also will be recorded, and it'll be on one of Fredrik's page. He'll reach out to everyone about that. Hope everyone enjoyed it, and we look forward to the next one, Fredrik.
Great.
Great. Thank you.
Thank you.
All righty. Thank you.